Hello guys, welcome back to my channel and don't forget to like, comment, share and subscribe. UK households face a rise of around 80% in their electricity and gas bills from October after the National Energy Market Regulator Ofgem jacket its price cap sharply higher again. Ofgem said its price cap for the typical annual dual fuel tariff will rise to £3 from October 1st from £1 currently. That's roughly three times what UK consumers were paying a year ago, and variations according to region and to actual demand may lead to some households paying even more. The increase in regulated price is set to drive another big rise in inflation, as well as greatly reduce disposable income across the British economy. It comes on top of a rough on tax increases announced earlier this year by the UK government to close the yawning budget deficit that widened significantly during the pandemic. The new cap will only stay in place for 3 months rather than the usual six due to the higher volatility in global energy markets since Russia's invasion of Ukraine in February. As such, another substantial rise is possible in January. It's a total catastrophe, said Thorsten Bell, executive of the Resolution Foundation, via Twitter, applying of games methodology. He estimates that the annual cap will rise by another 52% in January to £5 in January. For January alone, he estimates the typical bill will be over £7, well over half of the disposable income of the 4 million households on prepayment meters who will be asked to pay that energy upfront. The UK's energy crisis isn't confined to households, however. Thousands of UK businesses face bankruptcy this winter owing to their inability to pass higher fuel bills on to their customers. The new figure small firms are being quoted for energy costs would be laughable if their potential effect on the business were not so serious. Martin McTague, of the Federation of Small Business, said last week, nothing that the association's members are reporting 4 or 5-fold increases in their bills. These are hug in manageable sums for business whose margins have been bettered and whose reserve has have been depleted by the disruption to trading caused by the pandemic, McTague said. Even though of games move had been well fledged in advance, the pound fell in response to the news which underlined the alarming release of the coming winter. By 5 sterling was at 1 on the day, its lowest since the early phase of the pandemic. A look at the day ahead in European and global markets from Alun John. Did Fed Chair Jerome Powell watch Diego Maradona's second goal against England in the Football World Cup quarter-final? And can his speech later on Friday match the Argentina superstar streak? Marvin King, the former Bank of England governor, and maybe more familiar to Powell than Maradona, famously liked that goal and monetary policy in a speech to illustrate how people reach to what they think you are going to do rather than what you actually do. King noted how Maradona ran in almost a strange line from within his own half to score as several English players anticipated wrongly where he was about to turn and lunged out of his way. The logic is if the Fed sounds aggressive enough about its plans to hike interest rates to bring inflation under control, that will cause a market reaction in itself. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share and subscribe. Thank you.